When people think about banks, they think about the building at the corner with the granite pillars, and they think this is a solid, strong institution. And that's true, but it's also true that banks are about helping people get where they need to go, take care of their money.
If your parents sent you off to college with 20 dozen eggs and 200 gallons of milk to pay for your books and supplies, how would you carry it? Where would you put it to keep it from spoiling until the bookstore opened? Problems with this kind of bartering are what originally drove people to create money, physical currency that is portable, easily divisible into smaller units, stable in value, regardless of wild fluctuations like drought or hot weather, and durable, so that it doesn't simply deteriorate with time. Banks were created to store and invest money. A bank is an institution that accepts deposits of cash from customers, then loans or invests the money, earning interest, which it may share in part with those customers. Bank One started as a small local bank, but like many of its competitors, it became a major conglomerate comprised of many banks and related financial service companies.
We opened our doors on July 1st, 1863, which was during the Battle of Gettysburg, literally, and we survived the Chicago fire in 1871, and we've been a bank basically for 140 years. So many banks today, especially the largest ones, are a conglomeration of banks that were smaller, local banks that have basically put their assets together to become big, either regional or national players.
In fact, as this video was being edited, Bank One was preparing to get even bigger. Bank One and J.P. Morgan Chase have announced a merger which, subject to shareholder and government approval, should go into effect prior to 2005. Bank One is under the jurisdiction of the Federal Reserve Bank of Chicago, one of 12 federally run banks. If you've ever seen a big letter G on a bill, it came from Chicago and probably passed through Bank One at some point. The Federal Reserve requires companies like Bank One to follow specific fiscal policies concerning such things as how much cash they must keep on hand at any given moment. Too much cash in the market can trigger inflation or an increase in prices. Not enough can cause deflation or a drop in prices. The Fed can raise or lower the discount rate at which Bank One can borrow federal cash, or it can buy and sell government bonds to absorb or free up excess cash in the system as needed. When you think of bank robbers, you might think of Butch Cassidy and the Sundance Kid or Bonnie and Clyde. But today's banks are very secure, and the rare instance of a bank robbery doesn't even dent the institution financially. The real disasters that can befall banks sometimes come from customers. In 1907, a loss of consumer confidence in banks led to bank runs when all of a bank's customers withdrew their money at the same time in a panic, similar to the scene in It's a Wonderful Life. Since much of that money was invested in things like home mortgages to other customers, the banks fell far short of demanded cash and were shut down. The Federal Reserve System was created to set a monetary policy for the American banking system and to maintain a reserve supply of cash to back banks should such disasters occur again. But problems can still happen, such as in the 1980s when many of America's savings and loans failed. The Federal Reserve didn't cover that tragedy and can't protect a bank from the everyday ravages of an unstable economy.
Large corporations declare bankruptcy. If we have loans to those large corporations, that costs us money. Companies like WorldCom, companies like United Airlines, companies like Enron, the annual cost of people not paying us back, individuals and large corporations, went up by $1 billion for Bank One.
Many federally sponsored insurance programs now support most of the banking system, but companies like Bank One would prefer to not need such services. When institutions and customers handle their money responsibly, it has a positive effect on the whole economy and everyone benefits. Another challenge for Bank One is competition from non-banks such as insurance companies, pension funds, and financial services. Bank One has expanded its services to remain competitive with those institutions.
So Bank One is really a financial services company today. We offer everything from checking accounts to consumers, to credit cards that can earn people Disney reward points, to loans for large corporations, to mutual funds, to retirement funds, to college saving funds. So if there's a financial need that consumers or businesses have today, a bank often can meet those needs.
One of the secrets to Bank One's resilience and flexibility is that it provides so many different ways for customers to access money when they need it. Between personal checks, debit cards, and credit cards, cash is becoming more and more rare as a method of transaction. Bank One is one of the leading providers of credit cards to Americans.
Sometimes they're branded Bank One, sometimes they're branded Disney, United Airlines, Southwest Airlines, Marriott. So we have rewards cards for people who want to earn points for their spending. We have cards that have low interest rates for people who want to borrow and they don't care what it says in the card. And we have ones for people who do both. And so with 51 million cards out there, one of every 10 cards out there is a Bank One card.
It's hard to fathom now, but only 20 years ago, if you didn't take cash out of your local bank by Friday afternoon, you might be stuck for the weekend without money. 24-hour ATMs and electronic banking have changed all that. Now imagine what it was like over 100 years ago.
Well, if we go back to when Bank One opened its doors in 1863, there were big ledger books, right, that you would keep records of customers' deposits and withdrawals and loans on. And today, people sign their signatures on pieces of paper, but a lot of stuff is done electronically. Often you don't get paid by paycheck anymore. It's directly deposited into your account. You might check on the deposit to make sure it was made by calling the telephone banking. And you can talk to a person, you can punch in your account number to make sure the deposit was made. You can look at Bank One, for example, you can look online at copies, front and back of all the checks that you've written. If you need a copy of it, you press your print button and you now have a copy in 10 seconds of your check.
But the future of banking seems to be a move towards globalization. Bank One already competes with other banks around the world. But global institutions like the World Bank, which lends money to developing nations, and the International Monetary Fund, whose members commit to specific standards for the mutual exchange of their currency, are modeled on older institutions and haven't proven to be all that effective. The real future of money may lie in the unification of currencies, as when the euro replaced over a dozen currencies from different countries. The day may actually come when one stable world currency will be used everywhere, and that currency may not even come in coins or bills.
You know, people talk about, will we ever not need cash? You know, it's hard to know where we end up on that. Lots of people will always want to have cash, but with a credit card or a debit card, you can almost get away without cash.
Whatever money looks like tomorrow, people will always require the kind of personal service that companies like Bank One give today.
What we want to do at the end of the day is feel that we help people take care of their money. We help them save for retirement. We help them buy a house. We help them pay their bills. We want to feel like we're proud that we've taken care of people's needs and that they're better off for having dealt with us.